And welcome everyone to the live Q&A webinar. My name is Danny and I will be giving you the webinar today. Before we will begin, as always, as you know, we have to go through a mandatory check with the sound and with the chart, because what can we do? Sometimes things in technology doesn't go perfectly well. So I would like to please make sure with you guys comfortably find your question section at the bottom or sometimes at the left side. Just comment that the sound is okay or just okay. Okay for the sound and for the chart. In the meantime, I will go through several things, the structure of the webinar and what will happen in every step. The sound is okay for everybody else, guys? I see only one person. Thank you, Josh, by the way. For everybody else, is the sound okay? Sound is okay. Great. Thank you also, Dave. Great. Okay. All right. So firstly, we're going to take off with the common questions. Those guys are questions that we receive from time to time from other webinars. Dynamic questions is the actual purpose of this webinar. So guys, this is a live Q&A. It's a live questions and answers. The reason, the purpose here is to give you guys the stage to ask your questions and see the answers on the screen. Okay, so you are welcome to do that in any given time. You don't have to wait for me to get to a certain topic. You can just paste your question, and I'll have here, you see here, I have the space to paste it. Yeah, so this is the dynamic questions. This is a little more informative, so I'll send you some links here to save you the time and the trouble to search for several things. And lastly, analysis. Okay, you guys know the drill. If we're not going to get analysis questions, we'll have analysis covered, hopefully. Otherwise, we'll cover it during the questions themselves. Okay. Nevertheless, any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, a recommendation, or a suggestion. Guys, this webinar is recorded. That means that even if you've missed a part or you still need a recap with something that I said, feel free to just let me know. And of course, if again you need something after the webinar, it will be recorded, so it will be uploaded to YouTube, to our channel later on. Okay, I don't know if today, but possibly today, typically up to a day or two. Okay, so let me just make sure that the webinar is recorded as it's supposed to be, and then we will begin. So I'll be right back. Thank you very much. Okay, guys, so it seems like everything here is exactly as it should be. We're just going to take off, like I said, with the questions that we received. And let's examine the questions. So the first question that we have is, how much money do I need to trade 0.01 with Nasdaq? This is actually a pretty common one. What percentage of my account should I use per position? Oh, okay. Okay, how can I improve my trading psychology? Ooh, today we got some nice questions. Okay, so let's take off with the first, as it's apparently also the easiest. Just a second. We're gonna get ourselves a nice place for the notes. This is something I do in every webinar and lecture, and I suggest you guys to also try that. This way you can follow what we're doing and you can take your notes comfortably. Okay. With Nasdaq. Okay, first of all, this interface is called a web trader. I'm going to show you what to do to enjoy its full extent and not just part of the interface. And the first thing that we're going to begin with is obviously to place Nasdaq on the chart instead of Aussie yen. Okay, Australian Japanese yen. So what I'm going to do is I'm going to go all the way to the left. You see here there is the symbol. What I'm going to do is I'm just going to click here on the box, get rid of what is here. I'm going to type here NASDAQ. For the people who don't know, it's US Tech, US understroke Tech 100. But watch, even if I put NASDAQ, you know it by itself that it's to identify by the new name. Okay. Sometimes, as you can see, it takes a bit time. It's not. There is no way. Just a second. So you have to pick it manually. But then when you do it, it appears the way that it's supposed to be. Okay, so first of all, NASDAQ is part of the indices. I'm just going to go to indices. And we're going to go with NASDAQ. Let's search it manually. Okay. There you go. See? Now it's supposed to appear. If it's not, we're going to try and refresh the page. Sometimes the connection is sabotaging the, or maybe you can just, let's just open MT4. Maybe this could be a bit better. Hold on. Okay, there we go. So we have NASDAQ. All I did, by the way, is I clicked F5 on my keyboard, and within 3 seconds, it does that. You see, just refresh the page, and it does that. Sometimes I don't understand technology, but sometimes it just gets stuck, and you gotta loose it up. Okay, so we have NASDAQ here. Okay, US understroke Tech 100. The question here is, how much money do I need to trade 0.01 with NASDAQ? Now, what I'm going to do is I'm going to click sell or buy. Okay, it doesn't really matter. We're going to go with a buy. And then I'll have this nice sidebar which specify the lot size that I can trade. So practically here, one lot will be 100 unit, 10% of a lot will be 10. And in this particular case, according to the question, it will be 0.01. So 0.01 stands for one unit. 1 unit equals to 15,312. This is the buy price, and sell price is $1 less. Between $1.25 to $1.75 on average. You can see that it's keeps on fluctuating. And we're going to do this exercise to understand how much does it cost out of the account. Not the value. The value is one thing, but we're doing CFDs. For the people who don't know, CFDs are contract for difference. Okay, and what it means is those are leveraged trading. What is leveraged trading? Leveraged trading. Danny, does that mean that we receive a leverage? Yes, guys, this is the leverage. It's in particular, it's different. It could be different in individual in every asset. So for instance, we're going to have another, just for the comparison, let's take gold. Why isn't it? Oh, sure. I have to change that segment. I have to click sell or buy. Otherwise, okay. So that's apparently that's the same. Let's go with the stock. Sometimes stocks are different. Netflix. Okay, you'll see that the leverage here is different. You see 1 to 5. Now, how does that even have an impact on what I'm about to explain? We'll see in a moment. Again, gotta click sell or buy to change that. Okay, so how does that have an impact? Now, what we're gonna do is we're gonna put down 3 of the things that we have here: the value, which is an accumulation between the units and the units price, and we're gonna have the leverage and the margin impact. So the value is units, or maybe how many units units, multiply units price. Okay, that means we're gonna do it first of all, it will be verbally, it will be here, and then the numbers will be shown at the bottom. So how many units? Just one. Multiply price units. Units price is 15. 3. Okay, it just moved. Never mind. We're gonna stick with a single figure, even though sometimes it will be different, because what can we do? The market is open, and we can't keep quoting the the prices as it's moving. Okay, so this is the value. The value is, in this particular case, exactly as much as 1 unit, because we don't need to multiply that. Okay. The leverage is just the leverage. There is no need for a verbal interpretation. Okay, maybe leverage multiplies your buying or selling ability. Okay, so leverage 1 to 20, that means that we are hypothetically multiplied as if we had 20 more. Again, it doesn't work like that because there is a collateral, which I'm going to mention now. In other words, margin impact, the necessary amount to hold or open a position. Oh, come on. Yeah, meaning margin impact or requirement is 7. Oh, let me show you the formula. So we have the value divided by leverage equals that, right? The margin impact. So value divided by leverage, that means that if we're going to divide this by that, we're going to have this figure. We're going to do it one time manually. We're going to do it one time manually together. And this exercise, guys, is good for any other asset, not just particularly for Nasdaq. Okay, so 15,000 divided by 20, and there you go. Right? Is that understood, guys? Do we have any questions regarding that part? Any questions, guys? Now it's your chance. Otherwise, I'm moving on. We are in good pace. I don't want to ruin it. Any questions regarding that part? What if would have been 5? What do you mean, what if would have been 5, Phil? If you can explain. Oh, 5 units. Thank you. Thank you. Yes, 5 units. If it would have been 5 units. So let's follow the. Okay, you see 5 units. Now the value is much higher. Okay, let's do it together. So the value here is multiply 5. Okay, thank you. Maybe now I'll have a different example. Yeah, so that's how it goes. This is the value. We're going to divide that by 20. So let's do it together. C76500 divided by 20. And we have approximately, we're not going to go precisely what's after the decimal because it keeps on changing. But as you can see, the figures make sense. Okay. All right. So I'm just going to put it as an equation. Margin impact. Yeah. Right. So we have the value divided by leverage. Just going to paste it for your convenience here at the bottom of the underneath the question. Going to put nicely like that, and we're going to put here the definition, the true necessary amount to hold or open a position. Okay, excuse me, guys, hold on. Don't want to lose my voice. So what percentage of my account should I use per position? Okay, so let's see if there is something simpler than that, and I can save time and put more time into that. Should I withdraw? This requires time. This also requires time. This one is pretty easy. Okay, so we're just gonna grab the, how did that become the second? Let's try and revert. Okay, doesn't seem to work. Okay, I'm just gonna try and not follow the numbers. Question from Masiek, right? So margin impact is a risk measure when trading, when taking a trade. It's not exactly. I mean, it could be a risk measure, but it's not. Look, this question here, that's actually pretty magical that you're asking it. You see this question here, what percentage of my account? I think what should have been here is what percentage of my account, of my margin, right? That's what this actually really means, I think. What percentage of my account should I use per position, right? So what percentage of my margin should I occupy in every position? And then, yes, Masiek, what you're asking is a risk measure, but risk measure could be also using a stop loss, is an example. But this is also a risk measure, and the reason is if I don't have enough to hold this position in particular, let's suppose this position would have been like that, or even like that, right? So I'm using 7,600. If, God forbid, I lose, just a second, this is not enough. This is still not enough. I'm just hypothetically here describing a situation just to help understand a point. You see here, my potential loss is 3,000. In a case like this, when I'm using a position that costs 7.5, and God forbid I lose 3,000, I wouldn't even make it this far. You know why? Because I wouldn't have the money to occupy this position. Okay, I'm using it. I'm left with 2,300. Let me just give you the number and that's it. Hold on. Just doing it in my head. To be honest, a calculator maybe be more helpful. Why isn't it cooperating? There you are. So we have 10,000 minus 7,649. Okay, you see that this is less than 3,000. That means that I wouldn't even make it to the stop loss. Okay, I'll be stopped way before. Yeah. Okay, and not to mention I can't have two positions like this because it's too big. Anyway, I hope that the point has went through. So let's just. I just don't want to delay about it too much, but I will explain about it a little more comprehensively in the following question. Who can help me with documents? So guys, there are two individuals. I don't know if to call customer service an individual. There are two kind of departments which you can inquire with documents. One of them is your senior account manager. The other one is customer care, customer service. Okay, they are both accessible through the chat with us or the WhatsApp. You can get to customer service and you can ask customer service for your account manager to contact you. Even though usually the seniors account managers do contact the client at the assignment date, but sometimes they don't, so you can ask them to contact you if you really need, and they will assist you with the documents as well. Yeah, but it's not mandatory for the account managers. Usually it's the customer service is taking care of that. Yes, so I'm just going to paste both of them underneath the question. Hold on. Take that as it is, and hopefully, just a second. Yeah, I don't know if it worked. I have this 3 who refuses to. Oh, there we go. Yeah, so we have this one covered, that one covered. What percentage of my margin? This is more into strategy, but I guess it's unavoidable. Just, okay, it's inevitable. So what percentage of my margin should I use per position? Okay. So what do you think? Let's take this position as an example. The usage level here is approximately 76%, right? 10,000 minus 7,000, sorry, multiply 7,647 equals 76.4% margin usage. Okay. What do you think about this percentage? Is that percentage is it acceptable, guys? Is that percentage acceptable? What do you think? Is it okay, guys, if I use 76% of my margin on a single position? Is that okay? Okay, so 76% might be okay, but keep in mind that when you diverse, you want to keep margin free, okay, to maneuver. Okay, what did I write here? Right. What do I mean by to maneuver? To maneuver is that if, God forbid, I predicted something to happen and I'm with this position only, and God forbid my sell, let's suppose that I went for a sell, didn't really go too well. Okay, it started turning around. My asset is going against me right now. Okay, I'm with a sell. It goes up, it goes up, it goes up. Okay, so that means that, God forbid, if it reaches, let's say 15.5. Are we still with, oh, okay, there we go. Okay, so let's make it as an example somewhere here. We'll take it a little higher. We are 1 day. Just showing an extreme example here, just to show you guys the possible scenario, yeah? And I'm with a considerable amount. Well, not that big, but let's say that not everybody has 10,000 to have on the account, but if you do, at least you know how to be careful with it. This is too much. Let's go for it. 9. Yeah, it's approximately where we were at with the same ratio as before. Maybe a little higher. Just, I think we can actually put it on 16. Yeah. Okay. So if, God forbid, it's not even going to get here. Okay, let's keep it 15.9. It's a little less far-fetched. There we go. The problem is this nice cog that I have here keep blocking my view. Okay, so you see, in a case like this, what you can do to overcome that obstacle is you can click on the line, just change its coordinates manually. So I'm going to put here 15 and then 900, and that's it. No, it's not going to let us do that. What about now? 15. There we go. Yeah. Yeah, we did it successfully, guys. So if God forbid it goes towards that direction, something doesn't make sense. Okay, let's make it this way. Or maybe it was like this, and then this will be like that. Yeah. So as you can see, I wouldn't even make it this far, okay? I'll be stopped in a way. But if I think about going for a position with NASDAQ and I have 10,000, I wouldn't want to put 76% in a single position. I could, it's not that I can't, it's more about risk money management. And as you can see, the question here, what percentage of my margin should I use? So 76% allow me to take a single position with NASDAQ. But if I do this, how much am I using? 7%, right? 7.6. So 7.6 is much lower, much lower, and that means that if, God forbid, NASDAQ go against me this way, right, to 15.6, my potential loss will be much lower, okay? So that means that my margin impact, my margin requirement lets me decide how much of my account I'm really going to use on that position. So let's you know what, let's drop NASDAQ at this point, because NASDAQ again has a high value versus other assets which are not indices. So let's just take one of the common ones. Okay, and then I could show you the percentages. Okay, so for instance, if I'm going to go for 0. Oh, that's not a minimum. You see, if I go for the minimum with oil, as an example, I don't even reach the 10%, right? Okay, does this make sense? If a percent is 100, I'm less than a percent. Again, with the usage. This has nothing to do with the exposure. Okay, maybe just a little bit. Okay, but as you can see here, when I'm using such a small percentage, I have the rest of my margin to do what I wrote here. When you diverse, you want to keep the margin free to maneuver. Okay, if I only trade oil and I use my whole capital, still again, I wouldn't use my whole capital, because again, if I do, okay, let's exaggerate, but not too much. There we go. Okay, if I use almost all of my margin, what can happen if it flinches against me? Now for every dollar, I'm going to lose 1,000. So let's just put it $2 away. Are we with a sell? No, we are with a buy. Okay, as you can see here, this way I can accidentally wipe out my account. Okay, is that understood, guys? Therefore, I must think of a reasonable percentage which allows me to maneuver. Okay, so I won't get stuck and wipe out my account or close my position for that matter as well. Okay, if I can fulfill that number, what will happen is a platform will close my position. Okay, this is a deadly scenario. It will also wipe out, oh, it wouldn't wipe out my account, but it will put me in a very bad position. Okay, yeah, is that understood? Do we have any questions regarding that? Any questions, guys? So what is the percentage? The percentage is depending on the plan and diversification. How many positions and how big are they? And maybe also how long should they be? Yeah. So we're gonna paste this under. I hope that this is not too complicated what I wrote here. To be honest, I barely have a way to describe it differently. So I'm just going to keep it as it is. This is a pretty special question. I don't think that we had any question about that. Okay, so guys, let's have a look here. Should I withdraw my profits right away or compound? Right? What do you think, guys? Let's suppose I've made here a nice, I don't know, let's say 500. How much are we? With, let's say, sway, $1 higher. Let's suppose that we made, you know, a decent $500. Now we are with 10,500, not 10,000. What? Okay, I just made $500. Should I take it out or keep it in the account? What do you think? What would you do? You made $500. That's great. You want to take it out or you want to keep it in the account? What advantages and disadvantages do we have when we keep it in the account or when we withdraw that from the account? What do you think? When I make a withdrawal, the money comes out from the account, goes to my bank account. Okay? Now, when I made what I wanted to make in my plan, so if I withdraw every month, it's like my second salary, right? I have 10,000. 10,000. First month, 500. Okay, profit. Then take it out. So I stay with 10,000, right? This is one possible scenario. Now, second scenario, first month, 500. Second month, let's just put in the numbers, I think. Month, the first, let's put it this way, even though, guys, again, nothing that I'm doing here is guaranteed or anything like that. It's just not, it's much more dynamic than this, but again, I'm here to teach, so that's just what I'm doing. So let's understand what's happening here. So for all of those, we have 2,500 is an addition, plus the 10,000, which brings us to 12,500. Okay, if you don't believe me, so that's okay. 2,500, which brings us to this. Now, if I was able to average 500 with 10, maybe I can make more money with 12 and a half. Okay? That's the advantage. That's the advantage. I have much more margin. I can now trade with 25% more than I initially had. Or I could just keep compounding it more and more until it gets to practically, if I make 500, so in 2 years I double my account, maybe less, 16 months or 18 months, but I double my account if I keep with this consistency. What is the advantage when I withdraw every month? Okay, like I said, it's like a second salary. I get 500, I withdraw, I get 500, I withdraw, and then I can always add them back if I want. If I decide to trade with 12,500, I could just deposit everything back, and that's it. I'm back to the original amount. And when I withdraw, if I get caught to a margin call, what is a margin call, by the way? Margin call is when we decided something and God forbid it goes sideways and now we need more margin. Like the example that we used in here, right? We have 8,500 we gotta sustain this position with, and if God forbid it goes to sway and we don't have enough margin, you see we're losing. Maybe I took it too far. Yeah, even now. Are we with a buy? Oh, we are with a buy. Sorry. Yeah, so you see that when I God forbid in this scenario, when I lose 2000 and I require to have 8.7, I'm not going to be able to do that. So sometimes what I can do is I can add more funds. Then when I have more funds, I can fulfill the margin requirement. Yeah? So there are a lot of things, a lot of circumstances, and a lot of everybody has their own conclusions from trading, and they can decide whatever they want. But I'm here to present you the advantages and the disadvantages. When you withdraw, you can always deposit back. If you don't withdraw, you can grow your account and have much more margin, which is more comfortable to trade with. You can do more things. You can diverse more positions. You can take bigger positions if you want. More margin is could be very helpful. Okay, so the bottom line here, should I withdraw my profits? Again, this is I don't wanna again put here an answer depending on the plan, but to compound has, okay, I'm just gonna go down here and compound, sorry, and withdrawals has its own advantages and disadvantages, right? Yeah, but it's really depending on the plan, you know. Sometimes you can withdraw once a year. You can. There are clients that. Okay. Last question for from this section. How can I improve my trading psychology? First of all, what about trading psychology? How is psychology even related to trading? I thought I'm here to make money. I see numbers here, lovely candlesticks, some nice graph, green and red, and it's all very nice. How does that even have any connection with psychology, guys? Anybody has any idea? Is it that important to my trading? How much does psychology plays a role in trading? Maybe I'm going to reveal something new to some people today. Guys, how much does psychology plays a role in trading? Is it really important, or it's enough to just know the calculations and analysis and I'm good? What do you think? Just going to take a sip, sorry. A lot. Okay, thank you, Thomas. So a lot. What do you mean by a lot? You mean that psychology has significant impact on trading, or calculations are more important? Half. Okay. Thank you, Kabir. Masik also very much, in my opinion. Absolutely. Okay. Who else? Eliza, you can't ignore psychology when trading. Okay. So why is that? First of all, how does that even work? Because if you guys saying that this is serious, maybe I should be careful. I should somehow manage my psychology. Otherwise, you know, it's a mindset. Okay, okay. So when I'm taking a trade, I understand that it's not guaranteed it will go my way. That's the best place to begin with. And I understand that if I'm going to lose money, I might be upset, right? What can we do? Is there anybody in the audience that likes to lose money and have losses? I don't think so, right? And when you lose, you get upset. And when you get upset, sometimes you make hasty decisions, right? And when you make hasty decisions, Are those decisions usually measured, analyzed, and calculated? Or they are, well, not? Not all the time. Not all the time. Exactly. Thank you, Charlie. So we understand how can I improve. Okay, so let's get to the business here. How can I improve my trading psychology? How can I know that my emotions are not going to get in the way? Give me an idea here. This is actually one of the, I think this is one of the best questions that we had since we started this format. We always get questions about the margin and about the leverage, and it's okay. But this one, I'm really impressed. So guys, give me an idea. How can I improve my trading psychology if it's so important and so crucial? Because I don't want to lose. You know, nobody likes to lose. So how can I improve my psychology so my decisions will be crystal clear and I don't have my emotions getting in my way? Come on, guys, give me an idea. Nobody has any idea. You all such wonderful traders giving me here good answers and questions. Give me an idea. How can I improve my psychology in trading? Or maybe there is no solution. Is there any solution for that? If there is no solution, it's also a solution. Sometimes there is a formula that nobody can solve, right? Yeah. So do more trading. Do more training, but training how? Training for what? Training for trading or training for my psychology? Or without the right psychology, you can lose all your sight of your strategy. Listen to your emotion and get emotional. Best to analyze and train your mindset through books and gaining knowledge. That's actually a nice one. Yeah. Okay. Okay. Look, guys, when I have a plan, okay, so let's begin first of all. What makes us so emotional? When I'm trading, if I, as with the example that I've made 500, if I'm using a stop loss, I understand there is a possibility my stop loss will be triggered. Okay, that's just how it is. If I'm not using a stop loss, God forbid. Anybody has any idea what can happen if I don't use a stop loss? Let's not exaggerate, okay? Let's go with only one lot, but still, just to prove a point here, let's see what happens a few months ago. Let's suppose that I leave this position open, I just let it float, okay? God forbid, it gets to 77. This is again to impersonate what will happen with the stop loss, but without using a stop loss. Okay, so ignore that we're using a stop loss. Just look at the number here. If I don't use a stop loss, I can wipe out my account within a few months. Okay, if I use a stop loss, I understand that it can trigger. No problem. If I do the the right risk money management, I understand. I can lose some money, no problem. Okay, but I designed it. I choose it, not luck, not the platform. Me. Okay, I designed the plan. I have an idea. Okay, if I have an idea, I'm not gonna get upset because I designed it this way. I'm still gonna get upset, but less because I designed it, right? I'm gonna get surprised. And furthermore, I don't have to take one lot. I can just go with something relatively small that will go along with my plan, right? Then I don't get upset at all, right? This way or even lower than that. Let's go for something even lower than that. Will I get upset if I lose oh, what did I do here? No. How is it still 76? Didn't it? I thought we changed it to 85. There we go. Yeah. Will I get upset if I lose 80 quid, 77 quid? Much less than wiping my account. So psychology, when I have an idea and I have a plan, and I have goals, right? So I understand, okay, I aim for this number. I aim for this number. If I get to this number somewhere, let's suppose that I aim for $2 higher. So I'll make this number. I'm happy. What do you think when you make a profit? Do you want to take more positions or less? Let's suppose you've made 147. Now you want to make more positions, take more positions, make more profits, keep on running, keep on doing things, or stop. Usually, again, I'm sure that some people are transparent and perfect, but a regular human being like you guys and myself, we all have emotions and we all have greed in ourselves, right? So when I'm making the profit, will I want to take more positions or less? More, right? More. Thank you, Frankie. More. Guys, there is no really need to deny that. When we're making profits, we're doing good. We want to keep on running. When we're not, sometimes we also want to keep on running, which is the psychology. Psychology kicks in and it's giving us a push. Now, if I focus on those things, I have a plan. Okay, I have an idea, I have a plan, I have my goals. If my goal was to make 150 and I've made 147, I'm gonna stop. Okay, if my exposure is 1%, okay, losing 100 out of 10,000, which is 1%. So let's just increase it a little bit. Are we with a buy? Yeah. Let's make it this way. Okay, so what will happen is, in this case, I'm gonna stop because I've reached my exposure. So as long as I have numbers written down and I have a plan and an idea, I can comply. When I don't have any of those things, when I am just like a leaf getting carried in the river, so my emotions can be very significant. Okay, if I have the things written down, it's like baking a cake with a recipe and it's easier. It's not easier, it just makes more sense. Yeah? So how can I improve my trading psychology? Make a plan, have goals, have an idea about your trading style. There we go. There's no other way, guys. There is no other way. There is no, at least not that I'm familiar with, there is no way to eliminate your emotions. Yeah, especially not when trading, which is usually money that people worked for. And now if you've made a loss, so it's not really a pleasant situation. Okay. So we are done with this part here with the common questions. Before we'll go to your questions, guys, I'm going to share with you some links here. Okay, let's take that one. I'll paste it on the chat. If I could only find the chat. Oh, there we go. Okay. Isam, you're raising your hand. I guess you have a question. Please feel free. If you have a question, feel free to ask. Okay, let's also paste that one. Okay. This is so the first one is for the education center, guys. This is for additional videos and tutorials and all kind of interesting things. The second one is for login and deposit. So if you had enough with a demo and you just want to get down to business, so you can make a deposit and start moving. The help center is, well, what I said in the beginning about the documents and the customer service. This is also for a real account, to make a real account. This is for additional education, right? The academy is flooded with tutorials and all kind of things that can help you understand trading a bit better. And that's it, right? This is all the links. Yeah. So we have a few minutes for analysis. Who can explain to me what is this candle here? Who knows what is a dragonfly candle? Oh, how do I get rid of the... What about now? No. Okay. Maybe I'm just gonna do it on the chart. Let's see if we can find. Oh, there we go. Just find ourselves a nice candidate. There you go. Who can tell me what is a dragonfly candle? Guys, what is a dragonfly candle? Who knows? This is not really by definition. It's not really a dragonfly. Maybe this one. Yeah. Fuji. Ooh, nice. Who is that? Mina. Nice. So what exactly does that mean, though? Right? Who cares about, even though the actual, okay, never mind. We're not going to get into that, but never mind. So what exactly is that, right? This dragonfly candle. Who knows? What are those tails coming out of the candle body, right? Who knows? Why sometimes we have a candle there is a candle that looks like a regular candle. You see, just a normal candle with two tiny, maybe one tail here. Why we have a candle that is 90% tails and this thin area here. I wouldn't even call it a candle, but sure. What do you think? Signals and potential reversals of the market. Ooh, that's also a fancy answer coming from Messiek. So it could be, guys, a dragonfly could point on a possible reversal when it's on the resistance or on the support line. I don't know if you guys can see that, but this is a pretty good resistance line that crude oil held for how long? Let's see. Which it broke, by the way. I don't know if you can see, but it broke here, broke here, here, also here. So what does that mean, dragonfly candle? Okay, you can see that the actual movement was not established by the open and the close. There is a whole trail that it went across, right? So that means that if I'll investigate this week, let's just put here, which date was that? Oh, I'll tell you the secret. If you don't change the crosshair here, what will happen is you're just going to click and drag. But in practice, you're not going to get any information from the candle. So you must change to the crosshair. Yeah. Now, if I'll change to the crosshair and I'll dig deeper, this is the 7th. I'm going to change it to dailies. And from the 7th till the 14th, or maybe here, right? You can see what happened. So what actually happened is it reached all the way here. So it started nicely. It took off nicely. See, then it went down all the way 79.87 and it flinched back up, right? This looks very much like a torch. It's not a hammer. It's It's a mutant. I don't really know how to describe it, but you see it flinches down and then up, back up, followed by another bullish candle, a very nice bullish candle. Okay, when it reached the peak, what happened? Started falling, right? So this could be a very, very nice sign for a lovely entry. Okay, because where can I find it at the bottom? To be honest, all this nice group here, just maybe a rectangle will be better. See those guys here, not to mention the guy at the back here, but never mind. You see all those lovely tails. That what does that mean if it's a group and not just a single candle? Of course, there are structures. I can't find hand and shoulders here, but never mind, never mind. So you see what is this? What does that mean? The situation here, a lot of thin lines brought down. It broke. This is the last support, but it broke this support line, and as you can see, there is a bunch. What does that mean? That this price 72.60, roughly 7. Okay, this is a very, very strong sell, right? This is a very strong sell, but it couldn't carry on and break the support line, right? The same as it did here. And when it did, it didn't carry on down and just turned around up. So it failed here as well, right? And here and here. So we understand that 66, maybe a little lower than that, but it's a very, very good support line. It's a very strong support line, right? And when we see those things, when we see those so-called tails, we understand that there is a possibility to do what? What it does after it can't break the resistance to support, guys. What happens if I hold a rubber band and I just pull it? I pull the rubber band, I pull it, but I can't rip it off. What happens at the end? When I nearly gave you the answer. When I let go of the band, what will happen? If I stretched it, but I couldn't rip it off, what happens when I let go of it? Thank you, Tobias. It will fly. It will fly. Exactly as it happened here. You see somebody stretched the band and it flies. Stretch the band and it flies. And this formula is one of probably few hundreds of structures, of patterns, and it's not obligatory it will work, but it's one of many, many things. So what I suggest for technical analysis, if you guys would like to improve, is to just keep watching and finding the right patterns. Sometimes consolidations area could also be helpful. You can see there are certain levels. So if you know how frequent your asset is visiting the same average line, it also could be good. How much time do we have left? That's very unfortunate. Guys, it seems like our time is up, but I'm gonna give you a gift. I'm gonna give you a nice coupon to use to give your senior account manager, okay, that you've been in my webinar, which is a Q&A benefit. You can enjoy one of one-on-one premium market review with your senior account manager. You can give it to him. It's a proof that you have been on the webinar. And I'm just gonna paste it in the chat. And that's it, guys. It's been a pleasure. Thank you all for coming. Thank you guys for helping me with your such amazing questions. And that's it. Best of luck. Make a lot of profits and have a good rest of the week. Cheers.